It's nice, excuse me, it's nice to be back. I still have a little laryngitis. I think we have something pretty interesting going on with the weekly chart. Last week and the week before were exceptionally strong weeks. The two biggest consecutive bull bars occurring late in a bull trend. In fact, the strongest breakout of the entire rally from the start of 2016. When you get an exceptionally strong breakout like that, the strongest buy climax late in the bull trend, the odds are probably 70% that it's going to reverse starting within a week or two. So a pretty high probability that sometime in the next couple of weeks, we're going to begin to reverse down to the bottom of the buy climax, which is this low. And that's right around the open of the year, which is an obvious magnet. Here's the daily chart. Here's the open of the year. And that is the magnet. We'll probably get there some point over the next few weeks. It's about 100 points, a little bit more than 100 points. So it's about a 5% pullback. Bulls breaking above a big round number, 2,800. But I think after those two big bull bars on the weekly chart, the odds are against this week being a third consecutive big bull bar. And if it's not a big bull bar, then it's probably going to be either a small bull bar or possibly a doji bar or some kind of a sell signal bar this week. We have the vote at the end of the week on the government shutdown. And I don't think it matters whether or not they shut the government down. The weekly chart is telling us that this is probably the end of the rally over the next several weeks. So even if they keep the government open and they vote on some great budget, this is going to attract sellers. Consecutive big bull bars late in the bull trend. The bulls will see it as a gift, knowing that the best the next few weeks will be is something like this. And therefore they'll take profits just in case next few weeks are like this instead of like this. If it's just sideways, fine, they could hold long, but they don't know that. It may be down 10% or more, and they'd rather get out and then look to buy 5 to 10% lower, knowing that the odds are we're not going up much from here. And the bears know the bulls will do that as well. And consequently, bears will begin to short this week. Will they do it today? I don't know. They might wait until the vote on Friday. Bulls are hoping for a trend from the open bull trend. When the market rallies for an hour or so in the open, right on the open trend from the open bull trend, it usually spends most of the day sideways. Sometimes sideways for a little up, sideways for a little down.
Muted.
Right now, we finished Friday, always in long. We're still always in long. We're gapping up above a big round number and a very strong bull trend. But I would wait to buy. I would not buy the close. If it suddenly becomes a bear bar closing on its low, it's a reasonable sell for possible high of the day. Higher probability, wait for a micro double top or 3 consecutive bear bars. Globex market, we're testing the Globex high. The bears want a double top and then a break below the neckline and a reversal down. Trend from the open bull trend, always in long by the close, gap up. The close of bar 2 is above the open of bar 1, but you see what happened? Gap up, but what happened? So a lot of bulls, as soon as they saw the big bull bar 1, they bought the close. But other bulls, possibly bulls with more dollars, thought there would be a bunch of weak bulls buying the close, and the stronger bulls sold as soon as bar 2 opened. So this might be trapping bulls, and this could be an early high of the day. Even if the market waits until Friday's vote to sell off, maybe the vote won't come until Friday night after the market closes, and then the sell-off maybe comes next week. I still think the odds are against a strong week this week because of what we have on the weekly chart. Let me turn off the screen and open my examples folder. It's fairly common. You can see here, I was going to say it's fairly common to get consecutive bull bars in a buy climax. Sometimes you get one more small push up before you get the reversal down below the bottom of the buy climax. And you can see, even with the strong sell-off, we still went back to a new high. On the weekly chart, this is what I expect over the next 6 months. A sell-off below the bottom of the buy climax, and then a rally back up to a new high. Pair of consecutive big bull bars. We got one more small high and then a trading range, and a little bit of a sell-off to below the bottom of the buy climax. Here we got consecutive bull bars, one more brief new high, a pullback to below the bottom of the buy climax. A single very big bull bar instead of consecutive, a pair of bull bars. Same here, single bull bar. So what we don't know is, will we get one more small push up? In other words, one final bull flag and then the reversal down, or will we simply get the reversal down? Will we get, maybe a micro double top and then that, or will we simply do this? I think we'll probably do this. Not, we got a micro double top here, but in either case, I think the upside over the next few weeks, next month is small, and that we're going to go back down and test the open of the year. Still by the close, but tricky. Everyone's aware of how climactic this is. Everyone sees this is the 60-minute chart that we're accelerating upward. We're having breakout and breakout and breakout and breakout, and that increases the risk of somebody buying at the very top. If there's a disappointment bar, a bear bar, especially a bear bar closing on its low, bulls will get out and some bears will sell, taking a chance that this is just an early high of the day. Right now, it's always in long and strongly bullish. A pair of strong bull bars like this in a strong bull trend like we have makes a reversal down into a bear trend unlikely, unless the market forms a parabolic wedge top, which would require 2 more pushes up. If it goes up a few more bars, then we'll probably do this. At some point you start to transition into a tight trading range. Less likely the whole opening rally can become a trading range, especially if it does not have 4 or 5 bars in it, if it only has 2 or 3 bars in it. Okay, this is what the bulls want. Not likely. Same thing. And this is what the bears want. But consecutive bull bars, but big tail here, bear bar here, bear bar here. We do not have that today. Same thing. Is this the same chart? No, different chart, but same pattern. Can you sell? Nobody's selling. That's why we're going up like this. So I would not sell until we get a micro double top or 3 consecutive bear bars or a parabolic wedge, and we don't have any sign of any of that. Extreme buying. Traders are just hitting buying the market, holding on. What happens if we get a big bear reversal bar? Bulls will get out, right? And for the bears to short, I typically wait for at least a micro double top or a series of 3 or more bear bars. Is it still buy the close? Yeah, but with that big tail on top, a lot of the bulls will wait. Another gap up, 5, open above 4, tells you that a lot of bulls simply hit buy the market as soon as they saw the bull body. I did not. That tail is, I think it increases the chances that we may pull back here. I just noticed something interesting. 60-minute chart, E-mini, extremely strong bull trend. VXX, which is basically an upside down version of the E-mini, instead of an extremely strong bear trend, and we get a bounce here, and we're getting another reversal here. This is a measure of volatility. It's an ETF based upon the volatility index. And as strong as the bull trend is, the volatility index is starting to try to bend up on the 60-minute chart. And to me, that's interesting because the VXX usually corresponds to, it does the opposite of the E-mini. So if the VXX is trying to rally, it might be anticipating a sell-off. Like I said on the weekly chart, the E-mini did something exceptional, really unusual the past 2 weeks, and that will attract sellers. And some traders might be hitting in the VXX. I took a scalp. I'm back to flat. Can you buy the 4 low? Well, the odds are 4 consecutive bull bars, 3 very strong. The odds are buyers below. So I would not sell. It's actually pretty interesting. It's a high one buy. Probably will be profitable because a lot of the bulls know that the bears want a parabolic wedge. So 3 legs up. I did not buy it, but I think it's probably okay to buy. I do not like that tail on the top of 14. And then the weekly chart, I think, is really unusual. So unlikely to be a big bull week this week. Micro double top, possible high of the day, but I would not sell below. 6-bar bull micro channel, even with the bear body. I would wait for at least 3 consecutive bear bars before selling. Statistically, more buyers than sellers below 6. That means the probability is there are buyers below 6. But you need more than probability. You need risk reward as well. And I'm not sure the risk reward ratio is worth it. So I did nothing. I did not buy the 6 low. Is it always in short yet? No. However, the upside is probably not great. This is enough of a reversal so that, by the way, I was off trading, doing some stuff. Anyway, this is kind of like a small version of this. Trend from the open bull trend and then reversal down. Trend from the open trend, smaller than this, and reversal down. But it's enough of a reversal to make the day unlikely to become a big bull trend day. What about the bulls who bought the 5 high? Is it reasonable to do that? I think so. Yeah, I did not do it. I would not do it, but it's reasonable. And therefore, chances are bulls who did buy the 5 high, put a stop below 1, and are trading small will be able to avoid a loss by buying more lower. For the bears, big enough reversal, so trading range likely. So I think bears are now willing to sell, but they don't want to sell down here. They want to sell up here. Bulls, they see this as a pullback in a bull trend, and they're right. But it's enough of a reversal down so that it might be a trading range instead of a bull trend. If you have a buy the close rally on the open and then a deep pullback, the odds are the day is going to be a trading range day instead of a bull trend day. Buy the close bull trend. If you do get a gap up and it becomes a bear day, you normally need something. Here we got an endless pullback. Here we got a lower high. And you can see early bear bars. Early bear bars. A couple small bull bars, but a lot of early bear bars. Early bear bars. Okay, early bear bars. We do not have that today. Right? We have early bull bars. And because we have early bull bars, it makes a big bear trend day unlikely without the market first entering a trading range and forming a major trend reversal. Confusion. Big enough bear bar 7, so we're probably going to go sideways here for an hour, possibly more, possibly all day. Possible high of the day, micro double top, but most bears will not sell the 8 high. If 8 closed on its low, bears would sell. But right now they're thinking trading range day instead of bear trend day. And if it's a trading range day, they don't want to be selling too low. They want to sell up here. And the bulls, they're concerned that 7 is strong. And it increases the chances that today's a trading range day, reduces the chances bull trend day. A lot of the bulls want to buy a micro double bottom or a wedge bottom. So probably not a lot of buyers here. So probably sellers at the 8 high and above, and we'll probably go sideways to down to the moving average. The bulls will try to get a double bottom at the moving average. We had one last week when I was away. This strong sell-off, but became a double bottom at the moving average, and the bulls got a bull trend. The weekly chart, to me, is really important. So what are the odds that the market's going to get down to the open of the year and the bottom of this buy climax? They're right around the same price. Open of the year is the open of this bar, and the bottom of the buy climax is the low of that bar. I would say 70% chance we will do that. Last year, here's the open of the year. It never tested the open. It just went straight up all year. Very unusual. Normally, if you get a rally on the open of the year, it comes back and tests the open of the year later in the year. But it never got back to the open of the year last year. This is the weekly chart. I bought put spreads in here today. It's going to be a trading range. Can you buy the 8 low? I did not, but I bet the math is okay. Is this a lower high major trend reversal? On the open, you sometimes get lower high or higher low or any kind of major trend reversal, and it just looks like a minor reversal. It looks too small. And this is an example. I think it is not a good swing short yet, so I would not be short here. Even though, as I said, I bought puts this morning. I also bought VXX this morning, but that's, I think, a kind of a dangerous thing to do unless you can handle the craziness. This is VXX. So an incredible bear trend. It's lost 2/3 of its value over the past year, right? Yet I bought because VXX is a special type of ETF, and it does crazy things. You get 10, 20% rallies, but they only last a few days, 2 or 3 days. So if you're trading it, you're looking for a quick move up at some point in the next week or two, but then you have to decide where to put your stop. So, this is not something most traders should do. VXX is a very good day trading entity. It's an ETF, huge volume. A lot of traders trade it as for day trading. Look at these bars, 400, 500, 600,000 contracts per bar. That's huge. All right, so buy the close, sell the close. Is it a two-legged pullback in a big rally, or is it the start of a swing down? We have a tail here, small bar here, doji bar here, doji, 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 bad follow through 8. I think we're probably not going to go a lot lower before we start to go sideways. So if I were doing anything here, I would buy and look to buy more lower. I did not buy. I think we're going to get down to the moving average either by going sideways or a little bit more down. Bulls are hoping we get this 2 legs down, 1 pullback 2 to the moving average, form a double bottom with the low of the day, and then rally for the remainder of the day. For me, the single most important thing going on is the weekly chart. Are we always in short yet? I think the bears need a little bit more. Good bear bar 7, 11, bad follow through 8, 12. That's the close of the first hour. It's a reversal bar. The bar closed below its midpoint, but it's not a very good sell signal bar. We have a very tight bull channel. Wedge 1, 2, 3. So you can argue a parabolic wedge here, but unlikely to go straight down. Bears need a break below the low of the day, the 1 low. What are the chances that today can be a big bull trend day? I think small. And I still think that A trading range is more likely than a trend, either up or down. They're trying to flip it to always in short, but they're having a problem getting consecutive strong bear bars. And the bulls know that they can get a double bottom at the moving average, double bottom with the one low. This is what they want, and the bears want the reversal down to continue. I would be much more bullish if the weekly chart did not look like that. You know, this is a big, big problem for the bulls. Good bar for the bears, right? So this would probably turn it to always in short if it closes near its low. If it closes with a big bull body and a big reversal from the new low of the day, then always in long. But right now it looks like it's becoming always in short. Traders are selling the market, taking a chance that we're going to close the gap, get down to yesterday's close, possibly fall for a measured move down. Sometimes you get a measured move from the high of the day to the open of the day. Other times, right now, that's just about the same as the high of the day to the low of the day, so I'll keep it as high and low. Friday, short day, small range, might go outside down. Bulls are hoping this is simply a test of support. Friday's high, Friday's close. Can you sell down here? I would not. I think a lot of the bears who sold are scalping, and then they're going to wait to see what we get next. Can the day be a bull trend day? Probably not. That chirping that you hear sounds like a smoke detector. It's not. It's my modem. I had it replaced last week, and I'm going to have it replaced again today because it sounds like they gave me a replacement that has a bad battery. Big tail, but enough selling to make it always in short. Stop above 10 or above 6. Unlikely to be a bull trend day. So now it's probably either going to be a bear trend day or mostly a trading range day. I said on the open that I thought we would either rally strongly and enter a tight trading range or rally strongly and form a trading range day. Right now I think it's either a trading range day or a bear trend day. Some limit order bulls bought the one low, hoping for a bull bottom, and they bought more lower. So this is useful information here. Will it be able to get back above the one low? If so, it weakens the chances of a big bear trend day. Can you buy right here, betting on the reversal? I would not. Can you sell right here? It's a big enough reversal, just like we had big up, big down here. We have big down, big up here. And we have a lot of room to the stop here. Well, I would put the stop here or here. So not great. Confusing, and confusing usually means sideways. So today's probably going to be a trading range day. It's a little bit like this. Big bear day, big bear bar, and the market could not get back above the high, but it went sideways and it went up for a lot of bars. Yeah, but it just hovered around that close for the remainder of the day. We have a bigger version of it today. This did not go to a new low. Today we're at a new low, but the same idea. Big bear breakout, probably always in short. Big tail, probably a lot of trading range trading. Well, the bulls, they're hoping it's simply a a test down, a deep pullback from a strong rally up from yesterday's low. Parabolic wedge, 1, 2, 3, and a low of the day. I think the odds are against that. I think the best the bulls get is a trading range day. They might get up to the 13 sell climax high, maybe even to the 10 high, but I think right now I would say 70% chance we've seen the high of the day. But the big reversal on 14, 15, I think make a big bear trend day unlikely. Also, bad follow through 8 and 12 and 15. Usually you do not get that kind of bad follow through after big bear bars if the day is going to become a relentless bear trend day. Always in short, right, but stop far above. I'm going to move my internet modem to another room because the beeping is shrill. So I'm going to, my internet connection is going to go down for a couple of minutes. All right, so the bulls closed the gap, which is good for the bulls, but unlikely to be a bull trend day. Probably the best the bulls get is a bull leg and a trading range day. And bears are deciding where to sell. Do they sell the 15 high, or do they wait to sell somewhere up around a 50% retracement somewhere up here? I think this is a comparable thing. For the bears, it's a pullback from the 14 breakout, but not a good sell signal bar, 16. Always in short, probably we have not seen the low of the day, but a bad sell signal bar and a big reversal up. So not a very good sell. Bulls want a micro double bottom or a higher low. Trading range likely, so probably buyers around where we are. And the bears want a relentless big bear trend day, trading below yesterday's low, closing the gap. Yesterday, Friday, closing the gap down here, falling for a measured move. It looks more like we're going to form a trading range, but I would rather be buying with a stop than with market orders. And to buy with a stop, I would not buy above 15. I would need a pretty good bull bar here on 18, and I probably would be buying for a scalp. They bought the 1 low, they'll probably buy the 14 low, but I'm not going to do that. The bulls are hoping for a wedge, but right now it looks like we're going below yesterday's low. So wedge, rally, rally, and then rally. I would not sell the 14 low. Right now I think we're probably not going to go a lot lower before we start to enter a trading range. We're at a price where the market went sideways Friday. Did it sell the close? This is not really a good sell the close type of bear trend, even though we're always in short. I think bulls made money buying below 1, buying yesterday's high. They probably will make money buying the 14 low. I think bears would rather sell rallies than sell at prior lows. Remember I said I thought 14 would not be the low of the day. It looks like we're probably going to go below Friday's low and the day will become upside down. What we don't know yet is whether it's going to be a huge bear trend day or a trading range day. Are we going to go sideways here? This is bar 18. If you break below the range of the first 18 bars, 90% chance you're not going to a new high. And we just did that. So 90% chance are not going to a new high. However, we could get a reversal up and rally for, over 10 points and still not be at a new high. The odds of a big bull trend day at this point are small. 10% chance we're going to go very far above 6. The best the bulls hope to get is a reversal, a bull leg and a trading range day, down and then up. You can see hesitation. Bulls made money. It's important that the bulls made money buying below 1. 16 went back above the 1 low, and that will encourage bulls to buy below 14 or a point or two below 14 or below yesterday's low. Use a wide stop and scale in, and it will encourage bears to take partial profits below things, below 14, below 18, below yesterday's low. It reduces the chances that this is going to go down very far from here without first going sideways. Confusion, right? The bulls made money. They'll probably make money buying the 14 low as well. And if the bulls make money in a bear trend, the bear trend is probably not all that strong. And it usually results in a lot of trading range trading. Wedge 1, 14, 19. Parabolic wedge 8, 14, 19. A lot of times you'll get a reversal around bar 18, sometimes a little before, sometimes a little after. And that's what the bulls are trying to do here. They're trying to get this to be the low of the day. And they might get it. The best the bulls probably can get is a swing up. It could go a long way up, all the way up here, but unlikely to be a bull trend day. We could trend for several hours and it would still be a trading range day. Big down, big up. The bulls need a strong break above the high of the day. Not likely to happen. Bears, they'll get out. If they have not already gotten out, they'll get out above 19 if it closes near its high. Bull scalpers, will they buy above 19? Well, most of the bulls are buying with limit orders, 14 low, 18 low, and less willing to buy with stop orders above 19. They might wait to see if we get 2 or 3 bull bars and then buy the market, buy closes, or buy below bars. Bears sold above 15. Not a lot of bears are going to sell above 19 because it's a wedge bottom and a higher low above yesterday's low. Tight channel, so we may go a little bit above 19 and then pull back below 20, but the odds are we're going a little bit sideways to up over the next 5 or 10 bars. Looks more like weak bears getting stopped out than strong bears selling. So I think we're probably going to start to go sideways here. Weak bulls getting stopped out. We're getting buying at new lows, testing Friday's low. I said today would probably go outside down. A lot of times when the market is on the verge of going below, yesterday's low, it reverses up at or just above yesterday's low and does not go outside down. And that's what's going on here. You get some low risk, low probability bulls buying just above Friday's low, knowing that they'll probably lose money, but they also know the reward is huge compared to the risk, and therefore they're willing to lose 70% of the time because the win is so much bigger than the risk. So they buy a tick or two above Friday's low, risk a tick or two below, so they're risking 1 point, hoping to make maybe 10 points up here, maybe more. And you do not have to make the 10 points very often to justify taking a low probability trade. Outside down, but around a measured move from the high of the day to the 1 low. Next target, closing the gap on the daily chart, Thursday's high. Clearly always in short. 15-minute chart. When you see that, do you think you want to buy, all these 5 consecutive big bear bars, not worth buying. 5-minute chart, can you buy? Limit order bulls made money buying below 14, 18, 19, but I think better to wait for the market to go sideways before buying. Outside down days sometimes can become huge days, usually not. Above yesterday's high, below yesterday's low, closed in the middle. Here, above yesterday's high, below yesterday's low, got a double bottom and a bounce. Usually you get some kind of a bounce around yesterday's low. Here, not much of a bounce, but eventually got back above yesterday's low. This is what the bears want. They just want a huge bear day. Even here, when it got below yesterday's low, it traded back above yesterday's low. Below yesterday's low, bounce. Below yesterday's low, bounce. Below yesterday's low, no bounce. Very tight bear channel. Below yesterday's low at the end of the day, we're probably going to bounce. Bulls want a big reversal, right? They're hoping for this. But on all of these outside down days, you don't get huge reversals. Sometimes with an outside down day, you get outside down and outside up. Below yesterday's low and back above yesterday's high. Below yesterday's low, back above yesterday's high. And because yesterday is small like this, there's a better chance for it to go back above yesterday's high, which is the blue line. What do you do if you're looking for stop entry buys? Obviously, if you're buying above 21 or 22, your risk is big and you're buying in a tight bear channel. So, that is not ideal. I would get out of shorts above 21 if it closes near its high, and I would look to sell again around the moving average, maybe all the way up to the 16 high and the 1 low. Where around a measured move down. Whenever you have a day that rallies, reverses to a new low, and reverses back up again around a measured move, it tells you the open of the day is a magnet, and the market usually tries to get back to the open of the day at some point. This channel is so tight that we may have to go sideways for 5 or more bars before the bulls can try to get back to the open of the day. I have this drawn in at the low of 1. Well, it might be the open of the day that's the real magnet. Let me put it at the open of the day because of the daily chart. Daily chart so far has a bear body, and the first bear body in about 10 days. 11, 12 days, 2, 4, 6, 8, 10, 5, 6, 7, 8, 9, 10. So 10 consecutive bull days. Unusual. So the odds are we'll get a bear day today, especially with this kind of a start. But we still might test all the way back up to the open. And then at the end of the day, close somewhere below the open. The bears want not only a close below the open, but a close below yesterday's low. I would get out of shorts here and wait for a couple legs before selling again. And bulls, not a great stop entry buy. Bears want a double top with 19 and a break below 22 and then a measured move down. But this has a wedge look, repeated reversals up, 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 and big wedge 1, 2, 3. And then you typically get some buying below yesterday's low if the day goes outside down. So not a great location to be selling. whenever you have a big buy signal bar and a bear trend, and then the buy signal triggers by going above the bull bar, 22, very often you get a reversal down below 23. You get a reversal down below 23, but not a new low. So right now, the bears want a double top bear flag, 1923, but probably buyers below 23 and at least a little bit more up. Double top bear flags never look like they're going to work, but in a bear trend like this, they have a 40% chance of working. Wedge bottom, double top bear flag, 40% chance you're going to get a swing down. Even with a good rally, here's a close-up. We got 4 consecutive bull bars, yet the double top still led to a breakout and a measured move down. 40% chance of that. Double top bear flag here, despite a good reversal. Good reversal, double top bear flag. The two highs are rarely at the same price. Fell to a measured move. Some buyers fell to a measured move, reversal up. Double top bear flag, collapsed down, and buyers around a measured move down. Double top bear flag, good reversal, a lot of bull bars, did not matter. We fell for about a measured move down. Double top bear flag here, despite a good reversal. Double top here, it failed. We went to a new high, and then we got a triangle. 3 reversals down, 1, 2, 3, and we fell for close to a measured move down. What do you do? Do you sell below 23? The math is okay for selling below 23. 40% chance you're going to get a swing down. I mean, 60% chance we're not. I think 60% chance we're going to go up more, maybe to the moving average. If 23 closes on its low and has a 3-tick bear body, can you buy the 23 low? I would not. We're still always in short. Very tight channel, minor reversal. Even if we go up 5 or 10 bars, it's still a minor reversal. This is a minor reversal. We've got a higher low major trend reversal here, and then our trading range. Even though the rally went up a lot of bars, it's still, I would call it a minor reversal. Minor reversal. When it retraced, ended up retracing the entire sell-off, but minor reversal. It's still always in long here. Traders are waiting to see what the close looks like. If it closes on its low, the bulls who did buy and who are hoping for a test up here or here, they'll get out below. And if it closes not on its low, a lot of the bulls will hold and put a stop below 22 and take a chance that we get up there. For the bears, some bears will sell below 23 for the double top. It's a 40% bet. I would wait to see if we start to go down. The bears still want the double top bear flag. And as I said, when you get these double top bear flags, most of the time the rally looks strong. It looks like you're getting a trading range. Yet, here we go. See the close up. It looks strong. You get the wedge just like today. Wedge 1, 2, 3. And then strong rally. But here we got a slightly lower high double top and a relentless sell-off. It's not easy to hold short. So if you take this, you have to accept that you're taking a 40% bet for a reward that's greater than twice your risk. So below this bar, for example, you're holding for a measured move down based upon the double top. So your reward turned out to be about 4 times your risk, and you had about a 40% chance of success. It's not, it never looks good, but the risk reward more than offsets the probability. And for the bulls, most of the bulls will scalp because they think the reversal is minor. I think we're going back to the open day at some point today, and that today will end up being a doji day, pretty much the way it looks right now. And probably a small bear close, so we'll probably close below the open of the day. Buyers or sellers below 24? I just said 40% chance. This is a double top 19, and then we started a trend down. 60% chance it's not. 60% chance we're either going sideways or up. So the probability is buyers below 24. If 25 closes on its low, I think fewer traders will be willing to take the buy. Pull back to the moving average, double top 19, double top 16, probably buyers below, but 40% chance of a swing down. Again, the day is we're probably going to close right around where we are. I think we'll close below the open. We've had 10 consecutive bull days on the daily chart, which is very unusual. We have a strong sell-off today, so the bears have a reasonable chance of a bear close, a close below the open, and I think that's what we'll get. For the bears, swing short, probably sideways. For the bulls, probably buyer somewhere below 26. I bought as this was reversing up, and I get out at the 19 high. I did not buy the 26 low because the trading range is likely, which means we might pull back deeply. It's a bigger reversal down 27 than I was expecting, and that makes me not want to buy yet. And I did not take the short, so I'm missing the short. I am short other ways. I've got puts, and I also bought VXX this morning somewhere up in here. But down for day trading, I did not sell. I did not buy. We're in the buy zone. Probably some bulls buying the 22 low because they see bulls made money all the way down, buying below 1, 14, 7, 18, 19, 20, right? So, and they've already made money here. Probably a trading range. I said 22, minor reversal, even though the wedge, but it's very tight. And, you know, the bulls are hoping for a major reversal here, but 27, very big bear bar. Bulls, a lot of the stop entry bulls will want a pretty good bull bar here. So far, nothing has changed. I still think we're going to get near the open of the day, maybe above the open of the day at some point today, and close below the open of the day. Bears are hoping not only are we outside down, but we have a huge bear trend day, but we found support yesterday's high, yesterday's low, and at the measured move target. And I think that reduces the chances of today being a huge bear trend day. It increases the chances that we're in a trading range. Limit order bulls making money all day, all through here. And if the market is a big bear trend, the bulls should not be making money easily. They certainly should not make money 5 times. Okay, swing buy. All right, double bottom, failed breakup below the wedge. We should get up to the open of the day. For scalping, buying above 28, I'm less certain about that. Let's say we have a 2 or 3 tick tail on the top. A lot of bulls will wait to buy if that happens as well. Reasonable candidate for the low of the day, right? So reasonable buy above 28. The bears want 28 to be a pullback in a bear trend, pullback from the breakup below the 22 low. But with all the bulls, with the bulls making money at every new low, a lot of bears will not sell below 29. It's too low. It's near the low of the day, and bulls have been making money at the low of the day, you know, for over an hour now. Right now, I think the odds are against the market falling for the measured move, but I'll put it here just in case. Let's say the bulls get a decent bull close on 30. They still will probably buy above. The bears still always in short, but probably buyers 29 low, 28 low. This is what we're doing. Double top bear flag. It always looks like it's bottoming, but 40% of the time it just keeps going down and down and down. It looks like it's trying to bottom, but it just keeps working lower. Same thing here, a good bull bar, another bull bar, went above the high, yet just kept working down for the measured move. Micro-double bottom, but not a good buy signal bar. Limit order bulls, again, made money, 22 low, 29 low. I still think it's more likely that we're going to go up to near the open of the day at some point today. But the bulls are making money with limit orders, not with stop orders. So not a very good buy above 30 or above 28. And the bears, they're not selling below things. It goes below 18, 19, 20, 21, they bought. Below 29, they bought. So they're buying below bars at the low of the day instead of selling. They're buying back their shorts. So the bears, another double top, 28. Still always in short. Bears, probably some will sell the 30 high and or 1 point higher. Stop entry bears, not a great stop entry sell below 32. If it closes on its low, some might take the sell for a swing down. And limit order bulls, will they buy the 32 low? Not if it closes on or near its low. Stop order bulls did not get a good looking buy. Buying above 28. I think you can buy 29 if it goes above 28. But once you get 4 or 5 bars later, it loses meaning, and I usually do not buy that high. I'm looking for buy scalps with limit orders. Or if I get a really good stop entry. I was going to buy the 28 high. I had a stop order to buy the 28 high. But when we got that bear closed 29, I canceled the order. I think we're going up here, but we have a lot of time left to get there. I wasn't long yet. Nope, got to get above the moving average. Probably have to get above the 26 high. Probably need strong bull bars. I think the downside is limited. The bulls have been making money all day. I think you can call it a wedge with 1, 22, 28, or you can call it a failed breakout below a wedge. Failed breakout below yesterday's low. I said earlier, I thought we would go outside down and then outside up, which we did. We traded above yesterday's high, below yesterday's low, above yesterday's high, below yesterday's low, probably back above yesterday's high. But the real target is the open of the day. Going up, but not up strongly. The bears are hoping it's a bear channel that continues down. I've been saying for over an hour that I think we're going to enter a trading range. We're still in a bear channel, but I think it's also a trading range. I also have been saying that I think we're going to get back up to the open of the day or very close to it by the end of the day. A lot of time left. The bulls have been unable to create a higher low. I think this is a reasonable chance for them to create a higher low. I would like it to come all the way down to the 30 low and get a double bottom. Whenever things are unclear and you're looking for a reversal, it's usually higher probability if you get a double bottom, higher low. Tight channel, minor reversal. Usually the bulls need a double bottom before they can get a rally. Here you can see it's slightly below. We tried to get a double bottom here. We tried again here. Double bottom, higher low. They could get a swing up from there. Small double bottom and then a swing up. Minor reversal, tight channel. So you need a major reversal to get a swing up. Tight channel here. So usually you need some kind of a double bottom before you get that swing up. Same thing here. Try to get a higher low major trend reversal. Too many bear bars in a tight channel. The bulls usually need a double bottom. They tried to get one here. Not a very strong rally. They tried again here and they got a little bit more up. Minor reversal. Bulls needed a double bottom before they could get up very far. Went slightly below the first low. I think a lot of bulls want to buy around the 30 low, not at the moving average. In the buy zone, below the middle or around the middle of this and around Friday's low, Is it low enough for a double bottom, 31? Might be, but I think a lot of bulls would rather see the double bottom around 30. In the buy zone, the bottom half of the most recent bull leg, bulls hoping for a higher low major trend reversal. Bears still hoping for a double top bear flag, but I still think trading range more likely. We're at a price where the market was sideways Friday. So bulls, they're buying below things, below 36. They want to buy a double bottom 30. I don't know if we'll get there. I do not think there's a lot of risk to the bulls or the bears. I think there's probably more risk to the bears because I doubt we're going much lower, but we might get all the way up here. Bulls hoping for a stop order buy, but tricky. We have an obvious magnet 30 low, and therefore it could trigger the buy above 38 and then quickly drop down to the 36 low or even a tick below and then reverse up again. So traders buying above 38, probably better to put a stop below the low of the day, 28, than above 38. So that means trade small. Higher probability, you wait for a strong reversal up if we get one. And for the bears, we're still always in short, but when you get these double top bear flags, especially now we're starting to go sideways, I don't want to be holding short in the bottom half, and I don't want to be selling in the bottom half. This is where I would be taking profits because I think a trading range is more likely than a bear trend. So the bears we're in the buy zone, by the way, 30 low. I thought we might double bottom here. Will the bulls keep it from falling below 28? Probably. Or will the bears get a break below 28? I don't know. All I know is I want to sell near the moving average or near a prior high, not at the bottom. Bulls would like to get a decent buy signal bar here. Location is good. This is another decent stop entry buy. If it closes like this, if it has a decent bull close like that. Similar to 28, but it never triggered. You wanted it to trigger on 29. Similar to 22. Will the bulls buy with limit orders below 28? As I said, this is behaving like a double top air flag, and they're really terrible for bulls because the market's constantly looking like it reverses, yet it just keeps melting down to the measured move target. So it makes the math bad. Buying above 40, I was going to buy above 40, not filled. I was trying to buy above 28, not filled. And I'm not willing to sell at the bottom of a bear channel and the bottom of a trading range. Will I buy above 42? I really wanted it to hold the 30 low and then the low of the day, and it did neither. And that makes me less likely to buy on a stop above 42. There's something wrong with every buy, right? So better to wait. Limit order bulls keep buying below everything. They keep making money all day. That increases the chances that we're going to get a swing up at some point. That closes the gap up We have a gap up today. We had another gap up here on Friday. The bears are hoping that this continues down for the rest of the day. I don't think we're going to go down much more. I think we're probably going to go into a trading range. Do I still think it's likely that we'll get back to the open of the day? The further down we go, the less likely it becomes. I think right now maybe a 40% chance that we get all the way back up near the open. Forcing bulls to buy outside up, fairly high above the bottom of the range. Not a great looking buy, but I still think the bear channel is going to evolve into a trading range. And for the bears, you have to assume they're buying back shorts every time we go to a new low because the bulls are making money. So the bears are not able to trap the bulls. The bears are not able to get gaps down. They're not able to get open gaps like here, open gap below 8 and above 16. This trapped all of the bulls who bought here and tried to scale in lower. They had to exit with a loss here. We're not trapping bulls anymore. In fact, the bulls are making money. Always something wrong, right? Stop order bulls are having a hard time here. They got 3 bars with prominent tails above, and they're scalping out. We went 5 ticks above 28 low, so they're scalping up for 1 point. And they're probably not all that eager to buy with a stop above bars with prominent tails right below the moving average. The bears have sold off near the moving average several times today and made money, so they know the bears will be selling around there. And for the bears, it looks like they're buying back shorts at every new low. Here, so they buy back the shorts here. They're selling it. I don't know if they want to be selling this close to that low. I don't know. I would not take the sell. And stop entry buy, I probably will not take it. I'll probably, if I'm going to be buying above a low, I probably will wait for a break several ticks, 3 or 4 or 5 ticks above the moving average. And then if I'm going to be buying high, I want to buy high after I see good strength. Let me look at the Globex chart. We're around a measured move down based upon the height of that. So possible support below the Globex low. We're getting buying. But tight channel, wedge, spike channel might come up this area, which would be around the open of the day up here. Right now, I think we're probably not going to get all the way to the open. Will it be different this time? The bears sold around the moving average here, here, here. Will they not sell? Will they instead look to sell around major lower highs here or here? Very often the market has a reversal for 30 minutes or an hour before 11:30. So this could be the start of that. For the bears, another sell at the moving average. Limited order bears are probably selling 1 tick below the moving average, but I think they'll probably scalp. This is different ways to draw a wedge. 1, 2, 3 with 38, 40, and then 22, 28, and then 1, 22, and 44. Probably, I've been saying buyers below new lows, below 22, below 28, probably buyers below 44, but with the nested wedge and the time of day, the market often goes sideways or has some kind of reversal, sometime 10:30 or so. I suspect the buyers, instead of buying at the 44 low, will probably buy at the 46 low and will start to go sideways to up here. Stop order bears made money below a bull bar 16 and then 26 and 34. But with the nested wedge look, I would not take that short. Probably buyers below and then sideways or a little bit up. You can see instead of buying below 44, they're buying above 44. So the bulls are getting eager. Instead of waiting for a new low, they're buying above the prior low because they're concerned that we might not go to a new low. In addition, the bears who sold around the moving average, instead of exiting at the new low, also think we might not get to the new low, and they're buying back their shorts above the prior low. That increases the chances that we'll get a minor reversal here. Limit order bulls bought 46 low, 1 point lower, and it has to get one tick above the 46 low to make a profit. And this will be, one of the rare times today when the bulls bought money buying above the prior low. They made money buying the 29 low. And I guess they made money buying the 38 low, but they had to sit through a new low to get there. For stop entry bulls, I don't know. Stop entries for the bulls have not been good. They got one profitable buy 22, but that was it. Unless they get a reasonably strong reversal, a lot of bulls will prefer to buy with limit orders at new lows than with stops above bars right below the moving average. Bulls keep trying for a stop entry buy, but not many bulls are taking those buys. They're all losers. Accelerating down to that original double top bear flag with 26 and either 19 or 16. Also a 60-minute moving average. Getting it vacuumed down to 60-minute moving average and the measured move based upon the height of this double top. BXX, I bought it somewhere down here. I bought it in two different parts. I just bought it at the market. I didn't pay attention to the price. I also bought puts. I'll take partial profits here in a few minutes simply because it's a gift, a very big gain. Sell climax down to support, measured move, and the 60-minute moving average. Can you buy with at the market right here? I don't know. I'm going to wait. I would not sell here. This is a good area to take at least partial profits if you sold, if you're swinging. This is the opposite of what's taking place on the weekly chart. Here we have a pair of big bull bars late in the bull trend, probably a climactic end of the trend. It will probably test down to the bottom of the buy climax sometime over the next few weeks. Might get one more push up. I don't know. Right now I think it's more likely that we'll just start to sell up. And 5-minute chart, biggest bear bar in more than 20 bars. So late in a bear trend at support. Probably some profit takers here. Double top bear flag similar to today. Reversed up at the target. Got a little bounce at the measured move. Got a big reversal at the measured move. But huge bull bar. 3 decent bull bars. Right. The bulls need to do that. Big bull bar, micro double bottom. The bulls do not yet have that. They might get that, but until they get it, the odds are against the reversal. The bulls need a strong reversal up. Micro double bottom at support. I think the bears get out above 56. Aggressive bulls are buying here, either for a scalp or a swing. We're still always in short. It does not become long unless the bulls get one of those big reversals up. This kind of a thing. And even then, the bulls, did not They retraced about half of the day to the top of that last leg down. This is what the bulls want. They want a big bull bar. A big bull bar. What about the limit order bulls who bought the 44 low, the 50 low? Will they make money? I think they probably will. If they scale in, they look to buy more above a good bull bar. So if 56 closes on its high, they might buy above it. And for the bears, this is a good location to take at least partial profits. Depending on where you sold, if you swung down, you have a lot of profit. So it's good to take at least some off, especially since the daily chart is in a strong bull trend. Yes, it's in a buy climax, but it's still a very strong bull trend. So the odds still always favor higher prices over lower prices until the bears start to get 2 or 3 consecutive big bear bars. Not a good stop order buy above 56. Not a good stop order sell below 56. Probably buyers below 56. I would not sell down there. I'm trying to take partial profits on my VXX long. Remember, it's an upside down E-mini basically, and I'm having a problem with the order system, so I'm on hold trying to find out why they're not letting me take some profits off. Consecutive sell climaxes at support, 60-minute moving average, and then a prior low over here, but it's hard to justify buying. The limit order bulls who are making money all through here fail to make money here and here. For bears, I'm trying to take partial profits. I finally was able to get out. I tried to get out over here and ended up getting out over here, which is better, but I still don't like having a problem getting through to a broker. If the online order system is not working properly, I want to be able to call someone, to speak with someone within a minute. Weekly chart. I think we're going down here, open of the year, a little bit more than 100-point sell-off. That would be about 130 points down or so. That would be about 5%. Since I think the correction will also hit the weekly moving average, it might take several weeks of sideways to down trading to get there. So this is, I think better than 50-50. All through this rally, I kept saying the market should pull back, but the odds are every reversal attempt will fail and we'll probably go at least a little higher. We kept going higher. This is the first time when I think the bulls actually have the bears actually have probability on their side. I say that, but if we reverse up strongly tomorrow, that would change. But if we close down here, and especially if tomorrow is also a bear day, then I think the probability has shifted for a test below 2,700. Possible parabolic wedge with 55 and 59. And then a bull bar, not a very good sell signal bar, but it's still short. I did not buy here, but I did not sell here either. My last trade was taking partial profits on my VXX, but I still have most of the position. I'll probably take some more profits by the end of the day, because when you have these sell climax days, I would say 60% of the time you get a big bull day the next day. Big sell climax day. A couple of days later, we had a reversal. I'm hoping I don't have what I'm looking for. I wanted to see if I had some sell climax days and showing the next day, because I would say at least half the time when you have a sell climax day, the next day you have a reversal. Trying to think of where else I might have it.
much more to DirecTV than your TV channel. Make the most of your experience by taking advantage of all the features and entertainment available on your computer, tablet, cell phone, as well as on your TV. All included.
And I can't think of where I have it. I'm pretty sure I have examples of these cell climax days showing the next day, and half the time you get a pretty good bull day the next day. A lot of times the bull day begins at the end of this day. You get some profit taking. The bears take partial profits, and then the bulls buy the next day. What would be good for the bears is everybody knows that cell climax days usually you get a lot of retracement the next day, if not a big bull day. What would be good for the bears is if tomorrow they gap down and we get a second consecutive big bear day. That would greatly increase the chances that we've begun a correction back down to the open of the year. This is the daily chart. I'm up over $1 on my put spreads, which is unusual. So I'll take partial profits there as well. It's really hard to be up that much in a put spread position, but when the market falls 40 points, it can happen. Not a great buy signal bar, but I would get out of at least some or all of shorts if you're still short as a day trader. Parabolic wedge, a 40-point range, probably not going to be getting much bigger. So probably not much downside left to today. And magnets above, 60-minute moving average, 5-minute moving average. So if you're trading this as an always in short day, I would get out. While 64, not a good buy signal bar, 65 is a better buy signal bar. The bulls might be trying to get a 15-minute buy signal bar. Spike, parabolic channel. 60-minute chart. Looks like simply a pullback, 50% pullback of this from this rally. For the bears, a low one short. They made money below 61, below 57. But I would get out of shorts, possibly for the rest of the day. The bulls have a chance for a pretty good rally above 2 moving averages, maybe up to this area. Is it always in long yet? No, the bulls need to do a lot more. This is a minor reversal at this point. They need to get a strong upside reversal before traders believe that we're going to have a sustained rally. So still a low probability buy, but a single big bull bar I think would be enough to probably turn it long for the remainder of the day. The market might be waiting for the 15-minute bar to form a good buy signal bar, closing on its high, and then buying above that 15-minute bar. Normally, always in bears would get short again below a bear bar 66, but I would not. We have a parabolic wedge bottom. That's a climactic move. And I think bears probably should wait for a second entry sell. That's the 15-minute buy signal. It's not a great buy. It's buying a parabolic sell climax, but you might get a pretty good snapback, a pretty good bounce. Is it always in long yet? If this bar gets a point or so bigger, it's probably always in long. If it has a 4 or 5 tick tail on top, then probably not. So far, we're 4 minutes into the bar, and it's good, but not fantastic. So, it could be much more bullish. If it does not get much bigger, and if the next bar is not also a pretty good bull bar, then instead of up, we'll probably be sideways. Bears should wait for a couple legs sideways to up before selling again. I think it's a low probability sell below 69. I think we're probably always in long, but I don't think we're going to have a big bull trend. I think it's going to be big down, big up, big confusion, and trading range. I don't know if we're going to get back up here. Remember, it's an outside down day. And when you get these outside down days, sometimes you reverse all the way back up into yesterday's range. So it's possible we could go up another 10 points. I did buy. I went flat. And so right now I'm flat. But I think we're always in long. And I bought with a stop 1 tick above 65. And I put a stop below 64. And then once we started to go up here, I moved my stop to 1 tick below 65. I probably would not have allowed it to be hit. I would have gotten out sooner. Another test of the moving average, but probably buyers below. I think we're always in long, but I think we may simply go sideways for the remainder of the day. %50 pullback often is right around the top of the buy signal bar because the market often rallies for a measured move up based upon the height of the buy signal bar. Not a great stop entry buy after 2 bear bars and at both moving averages. I think we're always in long, but we might get a small second leg down before we get a second leg up. I'm going to turn the screen off and open the examples PowerPoint again. On those outside down days, I said sometimes you can get pretty good reversals. Here we got 2 legs up, 1 pullback, 2. This is similar to today. 1 pullback, 2. Tried to be 1 pullback, 2 here. Low 1, low 2. But too many bull bars. Probably bulls will buy the first reversal down. So I think where we are right now today is right here. Right there. Similar thing. And here we simply went sideways. We got a second leg up, but it ended up around the top of that first leg up. Similar to this first leg up after a parabolic sell climax, and a second leg up. We got the second leg up. I don't know how much higher we'll go. We may simply stay here like we did here. Not a good stop entry environment. Bull's still trying to get fair absorption up here at the end of the day. If we're not speaking, would I buy? I don't know. I think we're always in long. You can see we get down to the 50% retracement level. A lot of times I'll place a limit order there or a tick or 2 above, especially with the buy signal bar there. So I probably would have bought it, but not at the end of the day. I know I have a PowerPoint somewhere. I have slides somewhere showing that after these big sell climax days, you tend to get pretty good reversals the next day. And I just don't remember how I have it classified. I'm scrolling through here to see. As you can tell, I have a whole bunch of chapters or classifications. and I thought that I had some with the second day showing the reversals that often follow these sell climaxes. No, I cannot find it. I'll look for it after the close. Anyway, the dominant force controlling the market right now is the weekly chart. It's never been anywhere near this overbought in the history of the E-mini, even the history of the stock market, going back over 100 years for the Dow and almost 100 years for the S&P cash index. It's never been above the weekly moving average for this many bars. We're very far up, and now we have a pair of bull bars, both with good sized bodies, both closing on their highs. So it's a 2-week buy climax, and it's the strongest 2-week period since this rally began more than a year ago. This is 2016. So certainly as strong as this. In any case, more than 20 bars, more like 50, 60, 100 bars. The market has never been this strong. And when you get exceptional strength late in a bull trend, it's more likely an exhaustive move than the start of another leg up. This strong bull bar was the start of another leg up. All right. But this is coming very late, and it's the strongest that the market has been in far more than 20 bars. Sometimes you'll pull back for several bars and get one more buy climax and then a correction, a pullback. But this is so late in the bull trend, and this is so strong that I think this is probably the extent of it, that we probably are going to start going sideways and then down. So we may go sideways for a few weeks and then down to the bottom of the most recent buy climax, which is right here. And it's also the open of the year. So we have two reasons for the market to get down here. I don't know if it gets there in 1 week or in 2 months, but I think today is a reasonable candidate for the top. It would be better for the bears if this was closing on its low. We had a similar day. If I can find it, well, here's an outside down day and tail on the bottom, outside down day, tail on the bottom, and look what followed, right? And this could be the same kind of a thing. Outside down day here, tail on the bottom, did not result in much of a sell-off. So you got outside down day, big tail, a little bit more sideways to down. But when you get an outside down day and the day has a big tail on the bottom, I think it's less bearish. A lot of times the next day will be a bull day and you end up with an IOI, so an outside day, so inside, outside, inside. The bulls will try to do that tomorrow. The bears want to get followed through selling, but that tail reduces the chances. And then 10 bars without a bear body reduces the chances. And then Friday we have the vote on shutting down the government. And that's the major catalyst, and therefore we may try to get neutral, stay sideways, tight trading range going into that catalyst on Friday. As strongly bearish as this was, big picture, unless the bears do more, I'm not expecting the market to go down. I ended up getting out of just about all of my VXX today. Yeah, somewhere down here and then a little bit more. I forgot where, anyway, somewhere down in here, I got rid of it. When you get a 4% profit in one day, and when you know that most of these huge outside down days are followed by rallies the next day, it's worth it for me just to get flat. We've gone up for 10 days on the daily chart without a bear body. This is the first bear body in 10 days. And usually the first time the bears do something, they don't do much. And that means that we're probably not going to go down very far. So I'm thinking that this is a pause day, and maybe we'll go down a day or two, but I think probably sideways into Friday's vote. Excuse me, sorry about my voice. Like everyone else in California, I got whatever everybody has. I don't know if it's the flu or a cold or whatever. I feel fine, but my voice, I've had laryngitis for over a couple of weeks now. Friday, a tiny day, and that increased the chances of today being an outside day, either go below yesterday's low and then above, or above yesterday's high and then below yesterday's low, which it did. And it did it several times, actually. We went below yesterday's low, above its high, below its low, above its high, and then we sold off for the second half of the day. I don't remember a day going above and below yesterday's high 3 times like this. We gapped above its high, we went above its high, we went above its high, below its low, below its low, below its low. So that's outside 3 times today. Really unusual. But, Friday was such a small day, it's not surprising. On the open, we had a trend from the open bull trend, 1, 2, 3 by the closed market. That tail on the top of 4, I thought was a warning that we might start to enter a trading range. Bar 5, I would not sell above bar 5. You can argue maybe a micro double top with a 4 high. And it turned out that bar 6 was the high of the day, but I would rather wait until I see a bar that looks like 7 or 11 and then start to sell. I sold, I forgot, somewhere during 7 or the end of 7. And through here with a big reversal on 7, I thought the context was so good on the weekly chart that it was worth trying to get short. 8 probably sellers above, but we could go up and get a double top with 6. And then bad follow through, big bear bar 7, big bear bar 11, big bear bar 13, 14, and the follow through was bad. And I thought it was fascinating that here we are, a market that sold off 40 points on the day, yet the bulls made money, at least 5 times buying at prior lows and scaling in lower. That's unusual. Usually if you're going to have a big bear day, it's very difficult for the bulls to make money. But the bulls actually made money many times today on the buy the close rally up here, and then stop orders here, and then limit orders through here. Here they got trapped. But let me just say one other thing about this trap. You have bulls who see, if I buy the low and scale in lower, I make money. So I buy the low, and then oops, big breakout follow through. Most bulls who bought would get out here and take the loss. Some will say, I bet I can work my way out of this trade. And they will buy the low, so they get filled right here. And then they wait for a pretty good bull bar, like 65. And then they buy more just above its high. So this is their average entry price. And what happened when the market got to that average price? It sold off. And that tells me that some institutions were buying below bars all through here, making money. They bought here and they just used, a 20-point stop or something. And then they waited for a good bull bar, 65, and bought more above. And since the sell-off was so big, the bulls who did that trade, buying here and buying more here, decided simply to try to avoid a loss and not make a profit. And therefore, they waited for the market to get 1 tick above their average entry price, and they sold at their average entry price. And that's part of the reason why we got this reversal exactly right here. You had bulls who bought the low, just like they'd been buying for the past several hours, and they did not get out. They waited for a good bull bar that's at least 2 to 3 times the size of a scalp lower, and then they bought more above here. And as I said, they gave up their hope of making a profit, of getting all the way back to their first buy, but they were confident that it would get at least 1 tick above their average price, and that would allow them to get out, break even. So they'd lose this much here, and they would make the same amount here, and they'd get out, break even. Stop entry traders today, above 1, above 2, above 3, sure. Above 5 is actually an okay buy, but I would not do it because I thought we were not going to go up very far this week, and apparently a lot of institutions agreed with me, right? And so I did not want to be buying too high. Selling below 6, I would not. Below 10, I would not. Below 12, I would not. Selling closes, selling at the market, I would. I mean, I do that, but I would not sell below 6, below 10. Probability is too low. Here, below 26, I did not. Usually when I'm selling with limit orders near the moving average. You know, usually if I see the body's getting smaller, 24, 25, and then 26, I'll try to sell with a limit order either at the close of the bar or at the market as soon as the bar closes. And you can see the 27 close and high at the 26 close, right? 27 open and high at the 26 close. And that tells you traders saw the shrinking bodies going up to the moving average, and they sold thinking that the bulls are losing momentum, maybe we'll pull back enough for a scalp. And the bears did scalp, because you can see as soon as we went to a new low, we went up, not down. That means there were more buyers than sellers there. And a lot of those buyers were bulls buying, and a lot of those were bears buying back the shorts. That was the way it was all through here. We had some low one shorts down here. I did not take them. We had an II-57 and then almost an II-61. But I did not take them. 61, I thought it was the third push in a parabolic wedge, and that we would soon reverse up. So instead, I looked to buy the reversal up above 65. And 56, I thought it was a possible final flag, and that we might just go down 5 ticks and reverse up. So I waited. We did not get the buy. Buy the close, sell the close, 1, 2, 3, even 4 is buy the close. And then when is it sell the close? You know, maybe 13, 14 probably as well. And then the sell-off had pullbacks all the way down, so it's hard to treat it like a sell the close. It was sell the close again, 54, 55, you know, maybe even 56, but I think difficult to short, 58, 59, 60. We're in a parabolic sell climax. And if you're taking the short, you have to be able to manage the trade when it does this, because it's probably going to do this. Limit orders, buying the 6 low. Normally I would buy that, but today I did not, because I was looking for an early reversal, at least into a trading range, less likely into a bear trend. We got the bear trend. Probably sellers above 8, you know, probably buyers below 8. But it didn't matter. So at this point, big up, big down, big confusion, trading range likely. Probably sellers above 8, probably sellers above the high of the day, 6. And you have buyers at the 8 low. Some tried to buy more lower. They could not buy at 1 point lower. And buying above 12, I would not. And then 13, I think, represents the traders who bought that 8 low giving up. You can see, look at the high of 13. One tick above that 8 low, and a lot of the bulls who bought were unhappy with the size of 11 closing on its low, and unhappy that 12 did not have a bull bar. So it looks like a lot of the buy the low bulls, bar 8, who got filled here, gave up. And certainly I would not be buying the 12 low. 13, I think, and with the close of 14, I thought we was in short. I said I thought we would go below the 14 low. I did not know if we would go much below, but I thought we would go below the 14 low. And therefore, I'm only selling above bars 15, below bars 16. Both are okay, but you need to stop either above 13 or 10, because this can enter a trading range before going down. Bulls tried for a wedge with 19, with 1, 14, 19, and could not trigger the buy. The bears got a breakout, but reversal again, 22. And limit order bulls making money buying below all of these bars. So we're probably going to bounce here, but it's probably a minor reversal. Very tight bear channel. First reversal up usually does not lead to a bull trend. It usually leads either to a bear flag or a trading range, and therefore minor reversal. two little legs up, 22, pause, and then here, double top, bear flag with 19. Other computers see the double top as 16 and 19. And I said that these double tops never look like they're going to go very far, but 40% of them go down for a measured move, sometimes more. Today was more. And therefore, it's okay to sell below 26 for a swing and then just hold on. It's sometimes hard to hold on because it's always looking like it's going to reverse, but it's still short. So, really hard to be holding short. You sell below 26, stop above 26. Hard to hold short after the micro double bottom, fail breakout below the wedge. Higher low 38, but 3 bear bars. I would wait for a second entry buy. 40, never triggered. 44, fairly prominent tail, so not a very good looking buy. Moving average, reverse down again. Trying to reverse up again, 48. A better chance for the bulls. We have a double bottom 44, but a pretty big bear bar 47, and we're right below the moving average. And that's exactly where bears have been selling for the past couple of hours, so not a great buy. Accelerating down 53, sell vacuum down to support, 60-minute moving average, maybe some other targets below. Low 157, probably going a little bit more down, but probably not a lot more down. Would I buy any of these lows? I did not buy the 44 low, the 50 low, and I would not buy the 57 low. Same with 61. But at this point, 61, we're probably forming a parabolic wedge, 3 legs down, 1, pull back 2, pull back 3. And therefore, if you buy the 61 low, and if you can use a wide stop, you may have to use 10 points or more. You probably will make money if you can scale in below. It probably makes more sense to wait for the stop entry buy and take that. Above 64, I prefer to buy above a bull bar closing on as high as 65. And limit orders in here. I don't want to be buying the 69 low, big bear bar, but through here, if you're willing to trade with limit orders, selling above bars, buying below, you could have had a few scalps. Question on bar 53, I was thinking an exhaustion gap. This trapped me out of all shorts on the rest of the way down to 64. At what point should I change my premise and sell closes and the highs of the bars? What's one of the things about a day trader? I remember, 30 years ago when I started doing this, I would look at a 5-minute bar and my mind would be racing, and 5 minutes seemed like eternity. And I didn't know how anyone could trade the 5-minute chart because you're just waiting and waiting and waiting. And now that I'm an old guy, for me, I have enough time to make my decisions, and I see a lot more stuff than I did 30 years ago. And therefore, there's not that sense of impatience. And I don't have to, I don't feel bored. But what can easily happen is if you think the market's doing something, I sometimes talk about a black swan. If you lived in England 500 years ago, you would assume swans could not be black, that all swans were white. However, if you happen to travel down to New Zealand sometime in the 1500s, you discover that, in fact, you're wrong. There are a whole bunch of black swans. And, the exact opposite of what you thought was true. Here, it's reasonable to be thinking the market's trying to bottom. But whenever you feel pretty confident that the market's going to do something, there's an increased chance that the market's going to do the exact opposite. And therefore, whenever I look at something and say, oh yeah, this is a pretty good setup for the bulls, I'm always ready for the setup to fail and for the market to do the opposite. Because if it's obvious, then everyone's going to be positioned that way. Okay. If something is obvious, a lot of computers will be positioned that way. And if not enough computers buy as the market starts to go the right way, the way you intend, all of a sudden everybody has to dump, and the market can, make a big, do the opposite of what you thought. So wedge bottom, that's why wedge bottoms, when you get a bear breakup below a wedge bottom, sometimes you quickly go down for a measured move. Here we had a wedge bottom and we had a bear breakout, but most traders thought there'd be buyers below because there were buyers all through here. And then here, we got a breakout below the wedge bottom, which should not have happened. This should have held. And if we break below this, which we did here, I think it increases the risk of this, a collapse and a measured move down. We went much more than a measured move down. But back to your question, you thought it was going to be an exhaustive sell climax, and it's hard. You feel like you don't have enough time to change your mindset. So you're thinking exhaustive sell climax, maybe 2 legs down. Well, you got 2 legs down here, second leg 58, 59, and look at 58 and say, wait a minute, I wasn't expecting a big second leg down. I was expecting a small second leg down. And when you get the big second leg down 58, you got to be thinking, oh, maybe one more leg down. In other words, it may turn into a parabolic wedge, which it did. But I miss trends all the time, and I never worry about it. I'm looking to structure trades that make good sense mathematically and that emotionally I can trade. And sometimes I'm confident we're going to get a reversal, as we did today. End of the day profit taking. So down here, I did not sell anything down here because I thought we were going to do this. So instead I looked to buy. And so I never worry about, the market should have done something, and therefore I get trapped out when it does the opposite. A lot of times I'll just switch and sell the close. First sell the close to get out, and then pause for 10 or 20 seconds, and then decide that I'm so surprised by what happened, the odds are high it's going to do more, and therefore to sell at the market. But as I said, really good traders miss trades and miss trends all the time, and it doesn't matter. I never worry about the things I did not do. I only worry about the things that I did do, and especially the things that I did stupidly. So I really try hard to avoid doing dumb things, and as long as I can avoid doing dumb things, I trust everything is going to be fine. And the dumbest thing that a person can do is do something dumb, realize it's dumb, and don't get out at the market. Look to try to get out with a smaller loss. Usually if you do something dumb, it's better just to get out, take the loss, and then wait 2 or 3 bars and then reevaluate the market. Okay, big tail on the bottom of the outside down bar. I think we're probably going to rally tomorrow. So leg 1, pull back leg 2, probably back up into this area, Friday's trading range. And then we'll have to wait to see. I think we're probably going to be sideways into Friday's announcement, and it has the potential to be big. They could put off the vote again. They've put it off, I think, a couple times already. But I think if they do, traders will not like that. And if they fail to get the vote, in other words, if the government shuts down, traders are not going to like that. If they do pass and everything looks perfect to everybody, a lot of traders will do like I did and sell any strong rally, betting that the market's so overdone. Traders will use any strength to sell. So therefore, I think the upside over the next week or two is not very big. Weekly chart might get a pullback and then one more leg up. I doubt we're going to get much more up before we get down to the bottom of this buy climax. All right. Hope everybody has a good night.